Hold on to your hats, finance enthusiasts, because there's big news in the banking sector. The financial world is abuzz with the latest news from Danske Bank. Yes, you heard it right. This banking giant has reported a substantial increase in its profits. The figures are staggering, a whopping $70 million to be precise. Now, that's not something you hear every day, is it? And where, you might ask, is this windfall coming from? Well, it's all thanks to their expanding lending book. It seems Danske Bank has been making some savvy moves in the lending market, and it's paying off handsomely. Now, this may raise a few eyebrows and a lot of questions. What's the secret sauce behind this impressive growth? What strategies did they employ to boost their lending and thus their profits? Well, my friends, the answers to these questions are as intriguing as the news itself. So how did Danske Bank manage to achieve this? Stay tuned to find out. Now, you might be wondering, what exactly is a lending book and how does it affect a bank's profit? Well, let's start by picturing a library. A lending book in the world of finance is much like a library's catalogue of books, but instead of a list of novels and textbooks, a bank's lending book contains all the loans that the bank has given out. These could be home loans, car loans, student loans, and so forth. Now, how does this lending book factor into a bank's profit? It's quite simple, really. When a bank lends money, it charges interest on these loans. This interest is a primary source of income for the bank. So the more loans a bank has in its lending book, the more interest it earns, and thus the more profit it makes. Moving on, let's tackle profit hike. Imagine you've been saving money in a piggy bank for a year, and at the end of the year, you find you've saved $200 more than the previous year. That increase is your profit hike. So, when we say Danske Bank reported a $70 million profit hike, it means they've made $70 million more this year compared to last. Lastly, lending growth. This term refers to the increase in the value of a bank's lending book over a specific period. So, if a bank has handed out more loans this year than it did last year, we say it has experienced lending growth. But here's the interesting part. A bank's lending book, profit hike, and lending growth are all interconnected. A growth in lending typically leads to a larger lending book, and a larger lending book usually means more interest income. More interest income then leads to a profit hike. So you see, it's a bit like a chain reaction. One domino falls and sets off a series of events that ultimately leads to a bank making more money. And that, dear viewers, is the magic of the lending book. But the question remains, how did Danske Bank's lending book grow? Every success story has a strategy behind it. Danske Bank is no exception. In the world of finance, success doesn't come by chance. It's the result of a well-executed plan. For Danske Bank, this plan revolved around three key elements: customer relationship management, digitalization, and competitive pricing. Let's unravel these threads one by one. The first thread, customer relationship management, is as old as commerce itself. But Danske Bank has given it a fresh spin. They understood that banking is not just about transactions, it's about relationships. They fostered these relationships with their customers, understanding their needs, providing personalized services, and ensuring customer satisfaction. This strong bond of trust led to an increase in their customer base, which subsequently resulted in the growth of their lending book. The second thread in Danske Bank's strategy was digitalization. Embracing the digital revolution, the bank invested in technology to streamline their services and operations. They offered convenient and secure digital banking solutions to their customers, making banking an effortless task. This not only improved customer experience, but also increased operational efficiency, reducing costs and contributing to their profit hike. The third and final thread was competitive pricing. In a crowded banking landscape, Danske Bank managed to stand out with their attractive pricing strategies. By offering competitive interest rates on loans and savings, they attracted more customers, which boosted their lending activity and hence their profits. So, you see, Danske Bank's success wasn't a stroke of luck. It was a carefully orchestrated symphony of customer-centric services, digital innovation, and competitive pricing strategies. These elements worked in harmony, leading to the bank's impressive profit hike. So that's the secret sauce behind Danske Bank's success. But what does this mean for the bank and its stakeholders? A profit hike is always good news, but let's delve deeper into what this means for Danske Bank and its stakeholders. This surge in profit is a positive signal for investors, indicating the bank's robust financial health and promising future. It beckons potential shareholders with the allure of lucrative returns on their investments. For existing shareholders, it's a reaffirmation of their faith in the bank's management and strategies. But it's not just about the shareholders. This profit increase also has implications for the bank's customers. It could potentially lead to more attractive interest rates on savings and better services, as the bank might reinvest some of its profits to enhance its customer experience. In a nutshell, we've explored the recent profit hike at Danske Bank, broken down some financial jargon, and delved into the strategic moves that led to this success. We've seen how a profit increase can be a win-win situation, benefiting not just the bank and its shareholders, but also its customers. And there you have it, folks. A whirlwind tour of Danske Bank's impressive profit hike. Until next time, keep exploring the fascinating world of finance.